your time this morning.
Good morning. Thanks for having me.
Great.
My pleasure.
Yeah, so we saw your statement yesterday, but this morning we're kind of really interested in that part where the central bank is saying that the shareholders fund cannot be recognized. It has to be fresh equity. And yet, I don't know, help me to understand, and yet the banks are allowed to go to the capital market to raise new equity. Isn't that going to be shareholders' fund? Please help us to understand the full picture.
Well, I think what the central bank has set out to do was to ensure that we have fresh capital being brought into the banking system. That is the whole idea. But again, we also need to reckon with the reality that bank recapitalization is not an end in itself. It's a means to an end. And what we want to achieve is to ensure a stable banking system, to build the capacity of the banks to be able to fund very big projects and so on and so forth. Since the retained earnings actually belongs to the banks and it belongs to the shareholders, in order not to also create any major disruption, to the system, I think it's not out of place if the CBN also, listen to the stakeholders in the banking system and take a second look at it. Even if it's going to be a partial window, if the entirety will not be allowed, because it's retained earnings, it belongs to the shareholders. If they had shared or allocated all of this into shareholders, of course, they are at liberty to go back and purchase new shares. So I think in this kind of process, we have to also watch out for things that could disrupt the system. We need to ensure that the process is as seamless as possible. So that is why I think the CBN could also possibly look at what consideration can be given. And in any case, if you are talking about building a 1 trillion naira economy, both the small banks and the big banks have a major role to play. Because we are in an economy where we have the SMEs contributing almost 50% of our GDP. And the bigger the banks, the bigger the projects that they seek to implement or to execute. So you also have a place for the small bank, just as you have a place for the big bank. We should not lose sight of this reality so that we are not too fixated on big banks, given the kind of economy that we have, given the size of the SMEs, given the size of our informal sector, and given the reality that they contribute also so much to the growth of the economy.
So if the CBN insists on excluding these retained earnings, some people say it will put a lot of banks in a desperate place and perhaps make them reach out to politicians and all of that. But what do you see as a picture, possible impact of insisting on this exclusion of retained earnings?
Well, it's likely to put some pressure on them, the pressure to raise capital, and some of them may be forced into a merger that may not properly work for them. Because we need to draw a lot of lessons from what we had in 2005, when we had practically a kind of stampede, that forced some banks into, a marriage that wasn't working, that led to the loss of shareholders' investments, that also led to a lot of jobs being lost in the banking system. Some depositors also lost their money because those banks just went under, just like that. So there's a whole lot of lessons that we need to learn from the previous experience. This is going to, force a lot of them into some kind of desperation to raise funds. The capital market, well, that may be positive for the capital market because the momentum of activity, the tempo of activities in the capital market will increase, which is good for the capital market. But we need to look at the overall picture and the ultimate goal of ensuring that the economy at the end of the day is the best, is the better for it. I think that should be at the back of our mind.
And I mean, I always feel like asking this question: does more capital with the banking sector mean more funding of the private sector?
Yes, it does. It does. Because it's about capacity to fund. The bigger the capital, the bigger the capacity. And I think that is one of the main objectives of this recapitalization. Because there are some sectors now as we speak that because of the weak capital base, our banks cannot fund them effectively. And one example is the oil and gas. We also have, I think, something similar in aviation and also in the maritime. So there are some big ticket transactions that require this high capital base, because you need that capital base to be able to guarantee that if anything goes wrong, you have the capital to support it. That is the whole essence. You have the capacity to withstand any shocks, depending on the scale of the transaction. So there's a relationship. But in terms of the stability and the reliability of banks, it's not necessarily a function.
Oh, looks like we have a bit of technical hitch or network with Dr. Yusuf there. But I mean, it's a question that readily comes to mind, because when you have a CRR at 30%, you have NPR at more than 22%, we talk about how much is left with the banks, for funding of the real sector. How much of, or how many of the members of the private sector can even afford with the current interest rate? I mean, these are questions that, in spite of more funding, you ask if the funding will actually get to the real sector. I don't know if we'll have Dr. Yusuf back. Hello, Dr. Yusuf, are you back?
Yes, of course, I'm here.
Okay, all right.
I'm here, yes.
Okay, we lost you for a bit.
Those things matter.
Yeah.
Yeah, those things matter. The point I was making is that stability of a bank is not so much a function of the size of the bank. We have seen very big banks failed, both here and even outside the country. I think it's more of a function of management, corporate governance, and the way they manage their risk. That is what is important. Because if you look at the financial stability report as we speak, at least as at last year, practically all our banks are stable and sound. Looking at the key indicators or metrics, such as the capital adequacy ratio, the liquidity ratio, the non-NPL, that's non-performing loans ratio. If you look at all the ratios, our banks are doing well. So we should also be careful not to offset that kind of stability. So that is why it is very important that, yes, the CBN means well, we all support the idea, but we should also recognize that we should make this process as seamless and as less disruptive as it can be, because we don't have any major issue with the quality, with the health of the banking system. We should also create opportunities, because there's also the risk of asset bubble. If you have too much capital and there is no investment window to invest, you can create an asset bubble. We have seen that in the past, where asset prices don't reflect their fundamentals just because the banks don't find outlets to invest the huge capital that they have accumulated. These are also possible downsides that we need to worry about.
And yesterday, a guest of ours that we spoke to about this issue talked about the regulator themselves. If we're building banks for a $1 trillion economy, is the regulator himself, or is the regulator building itself to be able to regulate an economy of $1 trillion, and even the banking sector that can handle $1 trillion?
No, I think the regulators are up to it. Under the new leadership, we have seen the quality of corporate governance, the quality of compliance, and all of that. And I also imagine that this reform that you are talking about is not just about the banks. It's also about the regulators. There's been some internal processes to also reform the Apex Bank. We have seen some movements, some, reassignment, redeployment, and redefinition of duties. A lot is happening, in my view. So it's something that is happening concurrently, I believe. But let me also emphasize, when we talk about this $1 trillion economy, it's not only big projects that can deliver the $1 trillion economy. The SMEs have a role to play. The micro enterprises have a role to play, and all of them require funding. And that funding is not going to come necessarily from the big banks. So I think we need to make this point very clear. SMEs contribute over 50% of GDP. And most of the funding from the SMEs hardly come from the big banks. So that I think we need to look at. If you look at all the loan portfolio, I mean, the percentage of credit that is going to SMEs is less than 5%. And yet they contribute the most in terms of jobs, in terms of the GDP, in terms of economic inclusion, and so on and so forth. So we should have a much broader view of how these things work, so that will help to guide the kind of priorities and the kind of emphasis we put on some of these reforms.
So, Dr. Yusuf, before we let you go, I guess the NDIC might have, I mean, we know that Nigerian banks are generally stable. We've seen the ratings. But I guess a word from the NDIC to depositors might also be necessary at this time, don't you think?
No, it's very necessary. Not just the NDIC, even the CBN itself. Because this kind of scenario can create panic among depositors, among bank customers, going by the experience of what we had in 2005. So that reassurance, both from the CBN and the NDIC, is extremely very important. That is one. Secondly, we also need to watch out for banks who may want to take undue advantage of the smaller banks. Because sometimes in a competitive environment, there could be some anti-competitive practices. There could be some predatory practices within the competition framework. I think the CBN has to be on top of that to ensure that there is no attempt by any bank to take undue advantage of the other. I think those two things are very critical to come from both the central bank and the NDIC.
Well, they have 24 months, so at least before 24 months, because CBN has said banks should submit their plans, by April, and this is April. Well, thank you so much, Dr. Muda Yusuf, for your time this morning. We really do appreciate it.
Thank you. Thank you very much. Thank you.